Hey, welcome to a new week, everybody. It's time for Trader Talks in today's market. My name is Brent Moores. I'm sitting in for Kevin Horner today, and the great thing is, on Mondays we get to share the space here with guests, and today we get Jeffrey Abelos, I'm pleased to have him here. Jeffrey, how you doing this morning?
Wonderful. Glad to be on with you, Brent. Very excited for our show today. How's everything in your world?
Everything's good. I'm excited to kick off the week with Trader Talks. I think it's a good way to start the week, and it gets me up early to kind of check out the news for the week and prep for the week here. And so let's get to it here in just one sec. Let me go through a few preliminary things. First of all, welcome everybody. I see some familiar names in the chat there. That's great. Glad to have you here. If you're watching on recording, hey, we're glad to have you as well. I'm also joined in the chat by Mr. Mike Fairborn helping us out. Appreciate Mike. As you have questions, feel free to type those in the chat, and between Mike and ourselves, we'll do our best to get your questions answered there. Feel free to follow us on X at Brent Moore CS, at Mike Fairborn CS. Jeffrey, do you have an X account by the chance?
I have almost no social media presence whatsoever, Brent, and I absolutely love that. You can probably find me on LinkedIn, but I think my mental health is done a little bit better than some of my friends by
Yeah,
not
I
being in
would.
that space.
I think you have the right mindset there. That's awesome,
Yeah,
Jeffrey. Great.
thanks.
Hey, let's move on to some disclosures, and and then we'll get to the reason you're here, everybody. The information today is for general informational purposes only and should not be considered an individual recommendation or personalized investment advice. And we'll look at individual symbols here, of course. Those are not recommendations. The paper money application. We'll be using the Thinkorswim desktop software primarily today, and that's provided for educational purposes only. Schwab does not recommend the use of technical analysis as the sole means of investment research. Past performance is no guarantee of future results, and all investing involves risk, including loss of principal. And let's see. I think that's it. What are we going to do? This is what we're going to do. We're going to hit general trend in major markets. We're going to start off with major markets. We'll talk about some individual stocks, upgrades, downgrades, interest rates, and other news. And so there we go. Let's head on over to the Thinkorswim platform, starting with the S&P 500. This right here basically was an all-time high on the S&P 500. Back above this is a 20-day moving average and a 50-day moving average. Okay, so pretty strong trend. We tested the 20, dipped smidge below that, but promptly recovered. And we hear a lot of news, a lot of warnings about tariffs, about other potential things that could affect the economy. But the economy just keeps chugging along, doesn't it, Jeffrey?
Yeah. Yeah, you're absolutely right. And as the saying goes, the market climbs a wall of worry, and we're seeing that play out every single day, aren't we, Brent?
Yeah. Yep. And so we've seen this strength here. And today we've opened up, admittedly, the market's been open about 3 minutes now, but opened up relatively flat in the market. If you want to, you can look at let's just kind of see where we're opening in terms of, actually, here's what I want to do. I want to bring up a pivot points chart here. So here's today's pivot points. We're just starting out. This is the pivot point level, and here's our R1. So from an intraday standpoint, potential, can we go up here right now? Kind of just going nowhere on the S&P 500. And of course, the S&P 500, I'm just going to go back to our normal chart here. The S&P 500 stocks, I've said this the last few days, but we get new guests joining us each day. About 2% of the S&P 500 represents about 40% of the index in terms of market cap, and that's what controls its movement, okay? So about 10 stocks, 2% of that S&P 500, about 40% of the movement. So sometimes there's kind of a discrepancy between the S&P 500 and kind of the average performance of a stock in the S&P 500 because it's so top-down, heavily dominated there. And so what we can do is on the S&P 500, we can look at the SPX, which is doing this. And in fact, let me just do this real quick. Let me go to year-to-date chart, up almost 9% for the year. If I go to the SPX EW, that's the SPX equal weight, where all 500 stocks are equally weighted in this, instead of up almost 9%, we're up about 5%. So there is that discrepancy. It means we're getting pushed along by some of those bigger companies in the S&P 500. Now, where are we going to go the rest of the year in the S&P 500? I don't know. I know what the trend is right now. What about performance? What can we expect? What do you think? What do you think, Jeffrey, for the rest of the year on the S&P 500 here?
But like a lot of viewers out there, I have absolutely no idea what's going to happen. I don't have a magic ball. I don't have anything that tells me what's going to happen from one day to another. Some of the things I do look at, though, Brent, and to the viewers out there, is a lot of you who have watched me on previous shows know I'm very much into doing research and what do the statistics say, what happens historically. So just to give a heads up for everybody, if you haven't already heard, about, I think 66% of S&P 500 companies have reported so far. 82% have beat their earnings estimates. Now, that's the strongest beat rate since Q3 of 2021. Not too bad if you're looking for the earnings to try to give a signal on what could happen for the rest of the year. One of the other things that I'll note too is that historically, the S&P 500, the peak for the year historically has occurred half the time in the month of December. And a lot of you also know that the wintertime is historically better than the summertime. So, Brent, I don't know what's going to happen ultimately, but I do think a combination of the good news that we're seeing right now from the earnings, in addition to some Fed talk, which I know we'll get to in a moment about potentially decreasing rates, and then knowing that historically December is one of the best performing months, in addition to being the month where half of all peaks in the S&P 500 have occurred. I think there is an easier argument for the bulls right now than there are for the bears, Brent.
Yeah, so I mean, you have the kind of historical statistical argument, which you just mentioned. We also have the trend, which we mentioned. Potential support levels, just using technical analysis here, probably that would be a significant support level, which coincides pretty close to that 50-day. We're able to test below that 20-day, and the trend is going up. Of course, things can change, and past statistical, sometimes we look at seasonality on things and it doesn't really come to fruition. But we've had a decent beat rate, as you mentioned there, and one concern that sometimes people have on the S&P 500 is like valuations, and they'll look at PE and just remember, they'll go, well, that price seems pretty elevated on that. Well, one way to lower the PE is to improve the E part of that PE, and with that beat rate, that's a good thing. That's a positive thing in terms of the valuation there, in terms of we want to see companies continuing to beat their estimates. That's gonna help the narrative there. Okay. Yeah. All right. Let's move on to the NASDAQ. I don't think it's going to look that dissimilar here to the S&P 500 here. This is the NASDAQ. Again, trend has been going up. Again, probably some potential support level. Sorry about my crooked line there. My little drawing tool. Well, I can't blame the drawing tool. It's my hand, but it's a little harder to draw with the mouse. Again, I think that's a significant support level. Trend going up, and these are a lot of these. This is a lot of those bigger companies, and we'll talk about some of those bigger companies that are in the news here. Again, this is about break even to start the day, but companies like NVIDIA and AMD, which we'll hit up in just a little bit because there's some news regarding them. But any other comments on the NASDAQ before we move to the small caps there, Jeffrey?
Well said. Well, keep an eye out for everybody that's taking a look. You can see that we're hitting an all-time high right now. Now, that's something that could potentially be a resistance level. Just because it's there at this moment, that does not mean that over the next 3 to 4 days, it stays above that level. So what might you be keeping your eye on come Tuesday, Wednesday, and Thursday? Do we hold that 23,000, level, or do we go back below that? So if you're somebody that's toe dipping into a trade right now on the NASDAQ, maybe only put a little bit of that total position that you're looking for as opposed to getting half or maybe 100% of what you're looking to do.
Yeah, that's a good point here. Money management is a thing. You can still be bullish. You can still trade a trend and yet take, I don't know if precautions is the right word, but just use sound money management and risk management principles, such as you just mentioned, Jeffrey, there, as you're investing, just in case, maybe, who knows, who knows, but we have hit a lot of new highs, including all-time high today. And so it probably isn't unreasonable to think that we could have a little bit of a pullback there on that. Okay. All right. Well, hey, I'll tell you what, let's move forward to small caps, because that, a lot of times I show the S&P 500 and I show the NASDAQ, and the charts really look almost the same, to be very honest. Not so much with small caps. We've had a trend, but you can see nowhere near the high that we haven't hit a high recently there. We had a high back here. But since then, we're still below that 20-day moving average, not nearly as strong, seemingly, as the S&P 500 or the NASDAQ. Now, I guess the good side of that is, hey, maybe it hasn't run up as much, so maybe there's more potential on that. But also, if you're a trend trader, just not as strong a trend. Any thoughts on the Russell 2000 here, Jeffrey?
I think you have great points, Brent. And that 20-period simple moving average is probably going to be a big focus for traders moving forward. Now, I also did a little bit of research on the Russell over the weekend. This 11.5 surge in just 5 trading days, this has happened since 1990 about 32 times. So it's not a one-off or a two-off. This is out of 8,700 or so trading days, by the way, making it a 3 standard deviation move. And for those of you statisticians out there, you know that that's kind of an important one. Most previous leaps of this magnitude followed major market lows, but this one doesn't. This is not coming off of a low. As a lot of us remember, those V-shaped recoveries, down at the bottom is where you usually see these big magnitude moves. In this case, it hasn't happened, making this a little bit unusual. What can you draw from that? I have absolutely no idea. How you want to parse and parcel that stat from what is going on here? For those of you statisticians, what would you say? Well, you'd say John Bollinger and the 2 standard deviation move, that says this is significant and should probably continue. So I think that's what most statisticians would say. But Brett, I am not a statistician. I don't know what is going to happen as a result of this, but I'm always intrigued by things that happen as unusual outliers in the market, because there's something that I think people pay a little bit more attention to than others.
Yep, good point. Here, let me just for our purposes here, I want to throw on a Bollinger Band here just real quick and
Cool.
just kind of show, so here we go. These are Bollinger Bands. And so basically what we have is, this is kind of just a moving average, and this is a 20-day moving average. And these are 2 standard deviation channels here, essentially. And you see we had that little constriction right there on this, but this is an indication for those of you who aren't familiar with Bollinger Bands of the volatility of whatever you're looking at. In this case, the Russell 2000. When the bands are wider, that indicates periods of more volatility, and then as they constrict, it means volatility's gone down. And when they constrict, a lot of times, what people do is they look for what's called a squeeze, a Bollinger Band squeeze, and then a break out of that, and we shot down below and back up close to the moving average there on the Russell 2000.
And for the viewers out there that are saying, well, how come this isn't above the band? Well, it's because this is looking longer than just the previous, 5 trading days? If we were just to look at the 5 trading days, then you would see a break above the band. So for those of you that are kind of curious on what you're looking at, that's why that happens.
Yep. So here we're talking about this move right here, this little, which we were significantly outside on the longer term band, at least here. We were significantly outside and promptly moved back up, promptly move back up there. Okay, now one of the things that certainly can affect small caps more so probably than large caps are interest rates.
Yeah.
And what we saw was last, not this past Friday, but the Friday before, we had a kind of a really bad uh, employment, non-farm payrolls report. And that kind of changed the narrative a little bit, along with some inflation data that was relatively warm. And but the non-farm payroll report put a little bit of uncertainty into the narrative that the labor market is strong. So here's what I want to do here. Let's just look at the CME FedWatch tool for a sec. This is not a Schwab tool. This is CME Group. You can just Google CME FedWatch if you want to get it. And this is showing basically what the Fed funds futures are indicating for probabilities for a rate cut this is September we're looking at right now. And it's showing about 88% of a rate cut, because this is where we are right now. We're right at this rate right now. If I looked at this 2 weeks ago, I don't remember what it was, but it was like 20, 25% or something in that
Really low.
ballpark there. So we completely shift the narrative, and it appears that the Fed is, at least the market is interpreting the Fed as being much more likely to cut in the next meeting, which is the September meeting there. Any comments on interest rates there, Jeffrey?
Well, I think sometimes at Schwab we get lucky. And if you talk to Kathy Jones and the folks at the Schwab Center for Financial Research, I think it was back in January, they had said they were anticipating 2 rate cuts. It was looking like it was only going to be 1 up until, let's call it July or maybe early August. That most recent reading now put it as a probable rate cut in September, and then they're thinking 1 in December. Whether that happens or not, of course, we don't know. But that's the read on the tea leaves for us here at Charles Schwab, Brad.
Yeah, awesome. That's great. Now, so here's the 10-year. So just to be clear, the 10-year is not the Fed funds rate, and there can be disconnects over the long haul. They tend to be pretty correlated in terms of direction. But it doesn't always happen that way. Last time we had a big rate cut on the Fed funds rate, the 10-year actually spiked. But this is kind of what we're seeing right now on this. And and the reason why you'll probably see us talk about the 10-year more, is that it's a rate that a lot of people look at in terms of it's a pretty relevant rate for a lot of things, such as mortgages. There's a correlation between mortgage rates and this. Corporate debt. Often people will look at the 10-year as kind of an indication for that. And, I think what a lot of people would like to see is the 10-year rate going down. There's pros and cons though, right? I mean, what we kind of don't want is the rate going down because the economy is doing very poorly and the Fed needs to just lower rates significantly to try and jack up the economy there. That's not the reason really we want it to go down. But it would kind of, grease the wheels, so to speak, for certain economic things. And we brought this up because one reason is when we talk about like the Russell 2000, which we were just talking about, it certainly would help probably not just a lot of stocks, but especially smaller cap stocks if they had lower interest rates to try and help them there on that. Any other comments on that here?
Well, this could also play into credit cards too, talking about the everyday consumers. And for our viewers out there, some of us have credit card balances. So they're right now, and I've got a chart over here that comes again from the Schwab Center for Financial Research. You noticed over the last 2 years or so, we've gone from an average delinquency on credit cards of about 8% or so up to now being north of 12. that puts a lot more pressure on the everyday consumer
Yeah.
if you have a high 10-year yield, because that generally correlates to higher credit card interest rates. So a softening of this 10-year could be a little bit of a buffer for the everyday consumer, again, as we roll into the next few months. We'll ultimately see, Brent, what happens here. But I would say for somebody that says, hey, I'm holding a lot of credit card balance, seeing a 10-year start to pull back and give you a little bit of relief may not be a bad thing.
Yeah, totally agree. That's the thing. One other thing I would mention is this. I already mentioned housing, but the housing market to a lot of observers is kind of stuck in a sense, in that people are sitting on mortgages that they don't want to refinance because they have a lower rate.
Yeah.
A lower mortgage rate would probably cure a lot of ills in the real estate market right now here. So that's another thing that can maybe just boost the economy. There are questions in the chat: what's the difference between the 10-year /10Y, which is the 10-year yield future, and this? They should look very similar to one another, basically. Sri is the question in the chat. And so they're going to look, the chart should look almost identical, actually. In fact, they're on that. Okay, so that is interest rates. Now, one other thing, let's hit this up in terms of what's the Fed going to do? What's interest? I think the economic landscape certainly can affect that as well. And so I'm going to go to our economic reports here coming out for the week. This is this week. And anything on here that strikes you, Jeffrey, as important in terms of upcoming economic reports for the week here?
Well, the CPI, that one jumps out, the Consumer Price Index, but that's not the Fed's preferred read. It's the PPI that's coming on Thursday that the Fed likes to take its attention toward. But again, I don't know that anybody's anticipating a surprise happening here, Brent, but that's what could ultimately create a big wave in the market. If something comes out that we weren't expecting, that's generally when you see those big moves. It's not when things are very volatile and everybody says, oh my gosh, this is looking horrible, and then something horrible comes out that the market starts to move tremendously. It's when we feel like we are in a very calm period and somebody shakes up that dynamic. So I don't know that anybody's anticipating a very major move. Sure, there's a heightened sense of what could happen now because of that revision on the jobs numbers last week. This might be a pretty decent setup, though, for a little bit of an implied volatility for those of you that follow that measure. That could start to jump up as we get a little bit further into the week, ultimately peaking at the time of that PPI release. So those of you out there that are watching that, keep an eye out. Yeah, go ahead.
Let's take a look at that VIX here in just a sec. But let me just add one more thing to what you said, and that is you mentioned the surprise, and really it would put the Fed in a little bit of a pickle, so to speak, if we came in with really hot inflation numbers there. Because if they're looking to cut, heightened inflation is not what they want to see if they're about to cut there. So that could change the narrative, but I agree right now, and it's true not just with inflation is in focus now, but of course, at different times, there's different things that are more of a concern or in focus in the market. But it's going to come down to is how much the actual numbers differs from the expected number in terms of seeing a market move on there. Also on Friday, we have retail sales. I could see that potentially move in the market. We have University of Michigan consumer sentiment, sometimes maybe not as likely, but possible. Those are probably the bigger items this week here. Now let's go back to let's take a look at that VIX you alluded to there, Mr. Abelos. Let's see what we got here. Here's the VIX. So you can see this was spiked. This is, earlier this year, we had a lot of concern in the market. The market sold off. We got the spike in the VIX. Right now, we're right at 16 on the VIX. So what you're saying, Jeffrey, is with uncertainty, perhaps later in this week, we could see that VIX spike up a little bit.
A little bit, yeah. And don't expect it to jump up. You notice we go up really fast and then we start to come down slow.
Yeah.
We go up really fast and we start to come down slow. I would anticipate if it's going to rise, there may be a very short period, call it a day, maybe 2 days before, as chatter starts to come out in the market. What ultimately happens with that release, I think, will dictate if we have a spike above 20 or if it's just a very quick up and then right back down movement, Brent. But yeah, I think that's something that some traders are going to be keeping an eye on if they're looking to be net sellers versus net buyers of certain types of products.
Yeah, yeah. And well, I remember before we jump on to the next thing, everybody, let me just mention this. There's a survey link in the chat. I think Mike pinned that probably to the top of the chat. We do appreciate your feedback. So if you would just take a minute and fill that out, it's really a quick survey there. And you don't have to fill it out right now. You can just bring it up and fill it out after we're done if you like. But we always do appreciate your feedback. In addition to economic news, sometimes what can move the market is earnings. Well, we're through the biggest of the earnings of this earnings season, but there are still some companies out there with releasing earnings. And I got to get my date right here. Today is the 11th. So coming out this week, I just have S&P 100 here right now. Cisco and Deere coming out this week. Those are kind of the S&P 100. Let me just shift this here real quick, and let's take a look at the S&P 500. And obviously, we're going to have a lot more and probably a lot more that we're not as familiar with here. But let's see. So, yeah, I mean, not a lot. Applied Materials is coming out this week. That's a bigger one. And then next week, we got like Home Depot and whatnot. So, you know, and then we have NVIDIA coming out in a couple weeks. I don't, oh, there it is.
Yeah.
On the 27th. That's the next really biggie for the market there.
Yeah. Remember with earnings, it's a lot of the bulk of what you're looking for to transpire. It's kind of the law of large numbers for those of you that follow this. It's generally not one single company, although companies like Microsoft, NVIDIA, Apple, Google, Meta, those do play an outsized role, generally speaking, in the zeitgeist of what's going on in the earnings space. But it's really a law of large numbers. What is everybody doing? Where is the trend going? And Brent, like you mentioned earlier, we know a lot already about the earnings landscape. I don't know that there's going to be too many potential surprises left with what's coming up aside from maybe an NVIDIA.
Yep. So yeah, exactly. So, and you mentioned the rates of the beats earlier on earnings. That's kind of what we're talking about when we're talking about kind of what's the overall movement in terms of earnings here. So here's what we got. I mentioned NVIDIA because earnings still is due on NVIDIA. NVIDIA has really carried to a large extent the whole SOX index, because it's the biggest player out there. Yeah. Well, anyway, what we have some news on NVIDIA, as well as AMD, another huge chip maker. And the news came out. This is reported initially in the Financial Times. NVIDIA and AMD agreed to give part of their revenue, and it's 15% of their revenue, of chips sold in China. And I guess it's not all chips. It's that H20 chip from the NVIDIA side. Give part of their revenue, 15% of that, to give up 20% of their revenue, and that revenue goes to both China and the U.S. government as well. Kind of a strange agreement there. I'm not used to seeing that. I don't really know what to make of it, to be honest. So, any thoughts on your end on that one, Jeffrey?
Yeah, I think I need to start doing some more research, Brent.
Yeah.
I haven't heard of something like this coming out. I also would have to know what exactly that's supposed to mean. And then the other thing, and I think a lot of us are kind of tuned into this right now, there's a lot of pledges, and this is supposed to happening right now. Yes. That's not necessarily going to come to fruition. So when a company says we're going to be investing, let's say $100 billion in a given country over the next 5 years, that doesn't always happen. sometimes it's just the headline that they're looking for. I'd want to know if this is in fact the case, or if there has been some sort of agreement that's been signed by let's call it, I don't know, president, leader of a world country. That is something that I would say, okay, now there's a little bit more to rest on. But a company pledging to do something, it's having a little less weight these days than it used to maybe 10 or 15 years ago, Brett.
I would agree. I would absolutely agree. There's a lot more uncertainty in the market right now, and whether good or bad, the markets tend to not love the uncertainty. But who am I to say? The S&P 500 has just been trucking along. These major indexes have just been trucking along. They've kind of gotten used to the uncertainty, I guess, to a certain extent. But I think it's undeniable that there is more uncertainty about what's going to come about here as we go forward. That's AMD chart. AMD chart has been like, I don't know what to say about it. It's hardly had any pullback. It's stayed above its 20-day moving average since late April. When a stock is above its 20-day moving average for months and months, that's a strong trend.
Yeah. Well, here this is NVIDIA. Are you referring to NVIDIA or referring to AMD?
This is NVIDIA. Oh, sorry, I was going to switch to AMD as well, because AMD, we had a little bit of a pullback. We had earnings last week, I think, or a couple weeks ago, last week, and we had that pullback, but it has recovered pretty well. We bounced basically off the 20-day. Intraday it tested below it, but a lot of strength in AMD as well.
Yeah, for those of you traders out there, this is a setup where you say, okay, if I get into this company right now, I've got a pretty defined support level that's been happening again since the month of May. What's the benefit of that? Well, it's knowing that you're wrong quicker. So if you were to say, I'm using the 20-day as my support level, I'm going to enter this trade. Yeah. I will know much faster if I am wrong, because I'll have 1, 2, 3, or 4 closes below that 20-day to give me the signal that says time to get out. Versus if you get into another trade where your resistance level is a little bit further away, you might not know that you're right or wrong as quickly, and that could lead to further losses, especially in the short term of that trade.
Great point. Yeah, absolutely great point. If our goal is to minimize losses and let winners run, cut your losses short, let winners run. The key to that is, if in cutting your losses short, is knowing when you're going to get out. And if you're getting a quicker signal because you're closer to that support level, that helps. Now, when we talk about stop losses are kind of a big part that a lot of investors use, a lot of traders use in their money management, but stop losses aren't guaranteed, right? So we can put a tight stop on there, but a stock can gap down or make a strong move down, and there's no guarantee that the stop loss fill price is going to be near where the activation price is. But nevertheless, we talk about them a lot because they're a very popular tool and can be very helpful. Okay, so those are, they're on the news. So the news, the China chip news was both AMD and NVIDIA there. Another chip company that's been in the news last week, towards the end of last week, was Intel. Now, we looked at the chart of NVIDIA and AMD, and there were beautiful, nice trends. And that's backward looking. I don't know what the future is going to be on those. Not so much on Intel. Intel has had its woes for not just this 6-month chart, but for years, to be honest, here at this point. And the news last week was, well, the president, that is President Trump, called on for the resignation of the CEO of Intel, citing concerns about his, I guess, ties with Chinese companies or something like that. So didn't seem to affect they have a nice strong bounce today. I don't know what the cause of the bounce is today here, but it is nice strong reaction today on that. Any thoughts on Intel there, Jeffrey?
It's tough. So for a lot of us traders out there, it's very difficult when you have a news-driven movement in the thing that you're trading. So if you're trading Intel, and you've got news releases that are blowing out a perfectly good technical analysis strategy, that makes it very, very difficult to try to follow a trend or to do a mean reversion strategy or breakout, whatever type of trading you want to do. So keep in mind when you have companies like this, in whether it's Intel, NVIDIA, AMD, it doesn't matter, news is going to be everything. I could do 5 years worth of heavy technical analysis research. I could have a perfectly set out trade plan. One news story can blow all of that work out of the water. So
Absolutely.
when you're working with an economy or a particular company that's very sensitive to what's happening in the news cycle, be careful. That might be a time where you say, hey, I don't trade as much in this company, or maybe you try to tighten up your stops a little bit if you've already got a gain on there. If you're thinking I'm going to go into this position, maybe you wait. I don't know. It's up to you. As a trader, this is your strategy. Plan your trade your plan. But I find working, Brent, with a lot of traders out there, they say, hey, if something's getting a lot of news coverage, that's really not what I want to trade, because then I can't rely on what I'm seeing. I'm more focused on what's going to happen from a journalistic or a news reporter standpoint.
Good input there. There's nothing wrong with sitting out of a trade.
Yes,
you may
so
love
true.
the product, but it's you don't have to swing at any pitches here on this particular stock, or any stocks really, and you can look for one that just suits your fancy a little bit more. And just to kind of maybe reiterate, because I think it was such an important point what you just said, news or like earnings, when you look at a stock that's maybe like, let's say we were looking at Intel and we were going, oh, nice trend here. I'm trading the trend. What came about? Well, that's an earnings. I don't remember exactly what happened on that earnings, but I'll tell you what, the market didn't like it, and that broke a trend. More often than not, it seems that when you're seeing a trend break, like news or earnings is something that can break that. So
very much so. Yeah, good call.
Yeah, so just be aware of that. Now, let's take a look at some commodities here. We're not going to talk about trading commodities, so to speak, but I just want to talk about commodity prices because I think it's a big part of the market. And so let's talk about gold right now. Here's gold futures. And that was an all-time high on Friday on gold.
Mm-hmm.
A little bit of a pullback today on gold. But, interesting, because I don't know if this is a earlier, Jeffrey, you were talking about kind of the uncertainty in the market. Yeah. And I don't know if that's what's driving up gold, or concerns about valuation on the equity markets. You're putting your money somewhere. And if you're concerned about valuations, for example, in equity markets, or concerned about economic downturn, sometimes gold can, be a safe haven, so to speak. Any thoughts on gold from your end there, Jeffrey?
Well, it's got the idea that it's an inflation hedge. And I did some research a number of years ago. I don't know if this is still the case, but it didn't actually have a negative correlation to inflation. So that was something that I was a little bit surprised by. So if we're looking at inflation numbers, and we'll be seeing some coming out this Friday, take a look at what happens with gold. If the inflation numbers come out above estimates, and you watch gold start to rise, okay, now maybe more people are starting to think that gold is an inflation hedge, as opposed to what I think most people have viewed it as, which is historically just a safe haven asset in the worry of what's happening in the market, Brent. So these last couple of days, we'd have to really start to dig in to see what's going on. I don't think we have the time for that on the show today. But notice, as a market technician, look at that 50-period simple moving average. Gold has been paying attention to that thing for the entire year. Come back, giving you that nice little zone right there, dropped a little bit below once or twice, but it's come back up, drop below once or twice, come back up. So if you're somebody that's trading gold, whether it be this or a different product that's tracking it pretty closely, what are you looking for? You're looking for a hold above and a stay above that 50-period simple moving average. So once again, like we were talking about with AMD, if you're getting into the trade now, you're probably going to know relatively quickly whether or not you have a successful or an unsuccessful trade by way of that 50-period moving average, Brent.
Great. Yeah, moving averages can be good tools, kind of like objective, easy to view ways of kind of visualizing trends and support and resistance levels as well. So I think that they're kind of faceted in that regard here. Let's look at some individual stocks here. Actually, let's take a quick look at oil here before we go too far, and then I want to look at some individual stocks that had upgrades and downgrades. Oil, about $64 a barrel, well off its highs, and I don't know. I mean, we've had a pretty strong, little bit up today, but we had 1, 2, 3, 4, 5, 6, 7 days in a row of lower prices on crude oil. A little bit of a bounce today. Be interesting to see if that bounce holds there on oil prices.
Keep an eye too on OPEC Plus. That's another very news-driven product. So if you're somebody that's trading oil, you probably already know this. You're keeping an eye on what OPEC comes out with and if they're going to increase or decrease their supply.
Yeah, certainly oil. Remember, every time I talk about oil, there's a supply side and there's a demand side. OPEC, that's the supply side. We got to see that's a big part of the supply side. And demand side is kind of a lot of it. It's anticipated economic strength, not just in the U.S., but world markets, because oil is a world market. And so there we go. Hey, let's take a look at a few individual stocks here that I think are maybe something that we'd want to point out. And upgrades and downgrades. Let's start with the downgrade on a kind of a big name, Adobe. So here's Adobe. It doesn't seem to be reacting very strongly to a downgrade. It's actually up a little bit today, but Melius Research Analyst downgraded Adobe from sell to hold to excuse me, I said that wrong, to sell from hold with a $310 price target. So you can see the trend has been going down. The concern is, and this is something I think we've said before, they believe that these software as a service companies are susceptible to contraction given the shift to artificial intelligence. So a lot of the products, think of Adobe, think of their products, and maybe a little more susceptible to AI taking their place there. But I think, it didn't take the downgrade for the market to know that. I suspect that may be one reason why we've seen that downtrend and the struggle with Adobe for a little while, off of 465 down to 340 right now.
Yeah, quick comment on that too, Brent. So the intangible asset economy, a lot of people don't think about this. We think about people, we think about physical, tangible items. Intangible assets, things like IP, data, brand value, that now makes up around 90%, 90% of the US S&P 500 company assets.
That's
so
huge.
That's a huge number that we're AI is probably going to have a slight impact on what happens in that. Could be for the better, could be for the worse. So the fact that a company is coming out and saying, hey, watch out for this intangible asset could be substantially impacted by AI, I wouldn't be surprised if you start seeing more downgrades based on things just like this, Brent.
Wow, that's a great stat. 90%, huh? Okay.
Yeah.
All right. You know what? We are just about out of time, and I just want to take a minute to, as we're wrapping up, to number one, remind everybody there's a survey link in the chat. Mike just reposted that.
Thanks.
I want to thank Mike. And I want to thank you, Jeffrey. Jeffrey, tell us, since you're not on our webcast all the time, you're a wonderful guest, but what do you do in your day job, so to speak, here at Schwab, just to let everybody know?
I try to do, Brent, as little as humanly possible. I'm not very good at it, to be honest. But what I do, I'm very, very fortunate. I'm very grateful. I get to travel around Southern California and Arizona, meeting with our clients, talking about trading, talking about the markets, talking about economies, how market mechanics work, how options trading works, and so on and so forth. So I'm very lucky. If you have or live in Arizona or Southern California and you ever want to meet with me in the branch, reach out to your financial consultant. I am more than happy to talk about trading anytime you'd like.
Wonderful. Well, hey, it's been a pleasure having you on today, Jeffrey.
Great
It's
to be
also
here.
been great to have Mike in the chat and have each of you. You know, you just gave us a little piece of your day, and we appreciate you and look forward to seeing you again in the future. In the meantime, we're off to a new week, and I hope you have a wonderful week ahead, everybody. Have a great day. Bye-bye.